Okay, what's going on, guys? Um, I had somebody who was interested in seeing some of the data I presented in my last video for the market of Tampa. And so we'll just kind of go through that in a similar fashion to the last video. We'll just kind of hit on the demographics up front, the real estate data, and then um, sort of the macro uh, factors on the back end sort of tied all together. Um, but yeah, I mean, I just kind of like to start with the demographics. This is the population data for one of the four counties in Tampa, and it's all the the color heavy three of the four charts is cut by 5 year buckets for the most populous of the four counties in Tampa, and that's Hillsborough. Um, and it's again all this information. It's all the same data. It's just presented, you know, four separate ways. Top left is the entire population. Below that is the share for each age group. Uh, Top right is the year over year change, and then below that is the same thing, but it hasn't been cut by uh, 5 year age buckets, just to show how a visual can, you know, differ just in terms of how uh, it's cut. So, uh, look, I'll just kind of run through this quickly, give you my 2 cents on it, and we'll look at the other counties and kind of move on to more household specific uh, demographic data. So I look at this, and really I'm focused on the bottom left chart. Uh, there's and let me describe the color scheme real quick. There's two main groups that I'm focusing on: 25 to 54 year olds, which are in green. That's the prime working age population, and then 55 plus is that sort of pink coloring. And the darker the color is, the older they are within their respective cohort. And so this looks pretty much in line with what I see at a national level. We're getting older as a country. 55 plus is around 30% of our population. At a national level, 25, 30 years ago, I think it was closer to 20%. And so we're just structurally older. And so, not a whole lot of implications here, at least right away, when I start to think of things like per capita homes and the household size and things like that. So, but yeah, let's dig around and see what some of the other ones look like. I think Pinellas is the second largest, and right away I see there's just a bunch of old farts. I mean, 40+% has got to be over the age of 55, so probably more homes per capita. Uh, and there are some other considerations as to why that may be. Maybe there's a lot of vacant homes in the area, or second homes in the area, and typically that shows up in like vacant units and things like that. Uh, so let's look at Pasco, see if that differs at all. Again, sort of on the older side, even growth between the prime working age and 55 plus. Um, Obviously, a little bit smaller, I believe, than Pinellas, and then Hernando. Sort of the same pattern, maybe a little bit older than Pasco, but essentially the same thing. So, and again, there's a variety of ways we can look at this. I mean, that's what the state of Florida looks like, if anybody's curious. And I think most people, when they think of Florida, it's just a lot of old farts down there. So, uh, anyway, let's look at housing units per capita for a handful of counties, not just in Florida, but we'll compare it against, let's see, Bexar, which is, I'm probably butchering that, San Antonio, and then Denton County, which is in DFW in that metro. So, really, as I suspected, I mean, Pinellas County, because it's older, the household size is likely to be smaller, but also, uh, and I've looked into this already. I mean, there's a lot of second homes in that market, and so none of this really surprises me. But the general trend, as you can see through cycles, is uh, number of housing units sort of peaks, and then per capita, and then it sort of troughs and then comes back up. And that's a trend that you're pretty much observing across all these markets to a certain extent. And then below that, I'm just showing the population change for each one of those counties. And the point being of this, and this only goes back to 2000s, to just show that it's all a function of the economic cycle. This all sort of goes along with that. And so if you were to basically plot the Fed funds against all of this, you would see how responsive it is over time. And you can take this all the way back into maybe the 70s, 80s, and you're going to see more or less sort of those same trends. And we could look at this by the components of the population change, like net migration and natural change, but that generally confuses people. So I'm just going to kind of leave it there. But, that's my 2 cents on it. And again, like I've seen per unit on sort of a MSA metro level or even at a state level, but I don't see it as much at a county level, which I find to be a little bit more meaningful. And so, okay, let's get into some more housing specific demographic data. And so this is showing the housing stock in Hillsborough County. And by the way, I'm not going to go over every single component of the Tampa MSA. I'll just kind of hit the high notes here. But what this is showing is it's the same thing, but just shown two separate ways. The level of homes, like the aggregate stock of homes, and then the percent share below that. And this comes from the American Community Survey. It's the 5-year annual estimates. And so what that means is uh, for 2022, for that reporting period, they report the results from a 5-year or 60-month period. So it would be from a from 2018 to 2022. So the results for 2021 would be 2017 to 2021. And it's been shown to be much more accurate than they also have 1-year estimates. So if they came out with a 1-year estimate, it would be reflective of 2022. It's going to be more timely. It's going to be more volatile. But the difference being is there's a cutoff in terms of population uh, for the 1 year. And so it's not going to have as much coverage as the 5-year annual estimate. And so I just want to be clear. I'm more concerned about overall trends. These are conservative estimates. I just want it to be as accurate as possible. I'm concerned about the trend more than anything. And I would love to see this like on a monthly basis, whatever. It just does not exist. Okay. The point of this is to try to get a little bit of perspective in terms of who lives in the area, what does the household look like, that sort of thing. Okay, so look, when I look at this, more or less, it kind of lines up with what the stock of homes looks like at a national level. Maybe more renters, maybe just a tad more than what you see there. I think that's like 31, 32%. So you can see that renters are making up a growing share of the housing stock in Hillsborough County. Uh, and again, you can look at this a variety of different ways. And so the chart on the top is literally the same thing, but this time I've broken out homes with and without a mortgage. And anything like uh, just about really any market and things like this, I mean, is it really a surprise that you're seeing pretty, you know, decent uptick in homes without a mortgage as of late? But in the aggregate, this basically shows that most people finance their homes. And so below that is just kind of a bonus chart showing you uh, renter occupied homes and how that, how cost relative to incomes just sort of is distributed across those. So Uh, we can look at, so we've looked at the stock of homes. We can look at the size of homes or households, the age of various households, the types of various households. And I'll just click through this quickly uh, just to kind of, you know, hit on the basics. Again, I'm not surprised Pinellas is much lower from an owner occupied standpoint. Look, they're older people. They don't exactly have like kids and things like that living with them. So that does not surprise me. But if you notice, the trend was trying to reverse in 2018, 2019, either go flat or sort of increase in terms of the average household size. That's indicative of like financial stress. And what that eventually does is it puts pressure on household formations, which, if you think about it, the housing stock is dynamic. There's the existing supply, but new construction and things like that. And so it's changing over time. And so you have to have households keep up with the number of housing units in order for home prices to be stable in a given area. So that's just kind of the point there. But as you can see, it just completely plummeted um, after all that COVID stimulus. So, and I'll just quickly click through these other ones. That's just the distribution for Hillsborough County. Nothing about that jumps out at me in terms of outside of the sort of national stats. I would be concerned if there was, a lot of one person households, both renter and owner occupied here. It's not outside of those numbers really. Same thing here. I mean, if you had a bunch of sort of younger owners and renters, then that would be pretty concerning. And then let's look at the type of households. And this is really kind of a point that I think it's really underappreciated. And that's really when you look at the type of households. There's two buckets. There's family and non-family. Non-family is obviously in purple at the top, and then family, or at least if you're looking at the top two charts, uh, and then family is going to be everything outside of purple. Okay, so when you look back in history, 70s, 80s, when we last saw that big bout of inflation, that's when the household structurally changed because what happened was women came into the workforce in large numbers, and you had things like no fault divorce pass in states like California, I want to say in 1969. And then a lot of the other states were quick to follow, or quick to adopt those same things too. And so in an inflationary environment, you had all of these incremental households being formed. And so when you look at non-family versus family households over time, non-family is growing as a share of all household types. Um, so just to sort of summarize, when I'm looking at these markets, these are sort of the pressure points I'm focused on. If there's a lot of non-family households in a market, relatively speaking, a lot of younger households, a lot of smaller households, and maybe there's like a lot of renters in a market, then that is typically not a healthy market. And I'm not necessarily saying that here. I'm not saying that it's great because if you just look at it just from a price standpoint, it doesn't matter what metro you look at, it's all gone up and to the right. It's just absurd in terms of pricing. But that's kind of the point I wanted to make. It's not great, it's not terrible. And I'm just looking, and when I say that, I'm just focusing on Hillsborough County. I cannot say the same thing about some place like Pinellas, where I know that there's a ton of second homes. The household size is much smaller. I don't care if a lot of those folks don't have, a mortgage. It doesn't really matter. I mean, just given those dynamics, you could see decent price swings in a market like that, which I'm sure has, just based on where Pinellas is located, probably a lot of short term rentals as well. So, um, and then just kind of like one more chart. And this is just sort of how this basically illustrates how various households experience housing cost, whether renter or owner occupied, over time. And so essentially what this is telling you is that, post GFC, renters really never got a break. But as you can see, homeowners, on the other hand, just definitely not the case. But we also know, I mean, depends on what sort of, home price or area that you're looking at in terms of median home price and type of property. But if you're just going to look at an index, for example, across the MSA, I want to say home prices peaked in, was it like 2000, end of 2006, beginning of 2007 in Tampa, and then they bottomed in 2011, 2012 ish. And so, I mean, it was like what, a 40+% drop. Of course, that's going to influence what this looks like. But now it's basically because of where prices have come, and because we know that the stock of mortgages is dynamic, and some mature and roll off, and then you have originations that are subject to current conditions. Of course it's going to look like this is capturing sort of that inflationary uh, window that we're dealing with right now. So um, it is what it is. It looks like this all over the place to a certain extent. So this idea of dual income households and all that crap that people love to spin, it would be captured in something like this. So, gosh, all those talking heads are so full of it. Did you know that they track, the number of workers per household at, you know, the county level across time? I mean, I don't know why people say stuff like that. It just kind of blows my mind. So, all right, let's just kind of look at the real estate data now. So, Hillsborough County, sort of cookie cutter trend you see pretty much everywhere, and that is home sales are quite low historically. And so, focusing on the top chart, which causes inventory to move up. And if you look at the bottom chart, that's going to uh, eventually put downward pressure on home prices. And people might say, hey, look, this only goes back to 2012. Look, we could look at another data set. I just like this one because it's cut by property type. But yes, it's not as low as 2008. But here's another point I would make. Look, the housing stock has grown over time. Okay, so you shouldn't really expect it to be that low, relatively speaking. Home prices are absurdly low in a place like Tampa, and in a lot of these other markets in Florida and elsewhere. So let's just sort of keep that in mind. And we can look at this for Pinellas. It's probably a bit worse in terms of inventory, and it is. None of that really surprises me. So, let's just look at it a different way. Now we'll kind of break out what, you know, the top chart is just a line graph, and we can just show it as a stacked bar chart below and break out those two components. And, again, it's that same trend. Inventory just went way down as everybody relocated during COVID. And it's all pretty much normalized, which is ultimately going to continue to put downward pressure on home prices. It's not going to resolve overnight. If you think that, then you're just kind of delusional. But let's look at Pinellas and see if we notice anything. And right away, I think condos. And look, I looked at the stock of homes in that area by sort of structure. I'm not surprised by this whatsoever. It is what it is. Just more condos in that area, relatively speaking. And so I'm not surprised to see inventory uh, much higher, relatively speaking, in Pinellas. So let's just kind of look at it a different way. We can compare median list versus sales price per square foot for Hillsborough by property type, it's the same more or less general pattern. I mean, you're going to see more volatility in some 2 to 4 unit space because it as a share of the stock and what's for sale, it's quite a bit lower. So nothing really jumps out at me there. Not surprised. You're just seeing weakness all around. Now let's look at Pinellas. Yep, and what do you know? Condos look to be the weakest, and if we're weighting it by what's for sale, that's what I would focus on the most. So, all right, months of supply. This is one of those months of supply, year over year inventory, and then sale list. This is, obviously we're just normalizing this data across various counties of different sizes so we can just benchmark it. Um, you know, is it really surprising that it all kind of trends in the same direction? I think not. So, we'll look at Hillsborough, benchmark it against Pinellas, and what do you know? Pinellas looks the worst of the two within the MSA. And look, I've got a couple outside of the MSA too, and these are second home markets as well. And so, kind of, as you can see, those trend together. Let's see what Hillsborough looks like. So, I'm not surprised by that either. Now, for all the map people, gotta put it on a map. I don't know why people are so obsessed with maps, but we'll do it. So what I'm showing here is inventory year over year by county, and those are the dots. Versus below that uh, is those are demographic uh, boundaries by county, and it's showing the median age uh, relative to the national average. And so, as we alluded to earlier, Hillsborough County is just kind of right at the national stat, whereas Pinellas, not so much. And I'll just quickly show you what you can get out of something like this using this software. Female versus male, just kind of various stats, and then you can do the same thing by ancestry. So, yeah, it's cool software, but overutilized. And again, you could animate this map, for whatever time period you want. You could do it year over year. You could do a 3 year change, a 5 year change, but it's overutilized. It's a starting point. So, all right, so let's get over to what I consider kind of the meat and potatoes of this whole thing, and that's employment. And so, this I'm showing the MSA employment uh, by industry, and it's cut, three different ways. Top left is the stock of jobs by industry. Below that is the year over year percent by industry, and then the main chart, which includes the legend, is year over year uh, by industry. And really, what I take away from this, I'm focusing on the areas that have the largest or represent the largest bucket of employment and how it's changed over time. I mean, professional and business services, which is like, accountants, engineers, architects, folks of that nature, is negative year over year. Okay, so these are higher earning jobs. And think about what that does to the purchasing power of a potential household. Um, Information is also down year or negative year over year. Represents a smaller bucket in terms of employment, but it is. But the other thing I would just note here is that private education and health services, which is primarily healthcare jobs, is masking the weakness in a lot of these markets. Uh, those jobs, again, if you look at it, if you break that down, uh, a lot of those are like sort of medical tech sort of positions. They're not high paying. And so it's not quality job growth, is what I'm trying to say. Um, and then the other thing I would note is that financial activities, which includes people like uh, real estate agents and everybody in the banking sector, is also about to roll over. And you can see just in the stock of jobs over there to the top left how that sort of uh, changes with the economic cycle. It's very cyclical. So, and just by the way, we're looking at these two, the bottom left and the chart on the right. That's year over year. When you see this on TV, and this is the one that gets all the headlines, the establishment survey, they quote this month over month and seasonally adjusted. This is much more meaningful and can help you identify trends. And so, people who focus on the unemployment rate, I would just push back and I would say, what is that? If you asked somebody what that even means, is and where it is within the context of history, like, is that a good thing? I mean, most people don't even know how that's defined or how it's calculated. So, like, if somebody came up to me and they were like, hey, the unemployment rate for Tampa is 3.3, I would say, okay, well, I guess that's good. Like, am I suddenly like enlightened? Unless you understand how that's calculated, unless you understand like how mechanical it is in terms of why it can just suddenly skyrocket, then it's basically meaningless. So this is a much better way of looking at um, what the labor market looks like in any metro. And so, um, yeah, but look, let's compare this against some other areas of the country, Tampa, and let's just look at total private and how it, year over year compares to various markets, not only within Florida but elsewhere. And so, look at that; it all trends together. And so, there's a good chance if you see weakness in one market, it's going to look to a certain extent like another market. Shocker, right? Okay, what about, let's come at this another way. What about, like, you know, employee pay? So the point in this is, and this is the same data just shown two separate ways, is that generally speaking, you start to see weekly earnings flatline or just go outright negative in the face of a downturn. That's no different here. You've seen a bit of a bounce for Tampa, but if you were to look at like average weekly hours or something like that, you're going to get sort of a different result that's going to indicate that it's probably not what you think it is. And so I'll just kind of click through this. Like Orlando, look how that's sort of flatlining. Miami, it's kind of like this double tops, but so to speak. So that's my point in kind of bringing that up. But again, there's two separate ways that they account for jobs. So this is, at a national level, there's the establishment and the household survey. And this is not quite the household survey, but it is based on the concepts of the household survey, where they estimate employment at a local level. And so, just quickly, I'll explain the difference between the two surveys. This one, and when I look at this, I'm just sort of thinking of the household survey. This one only accounts for multiple job holders once, whereas the establishment survey doesn't make that distinction. This one also includes unincorporated self-employed individuals, whereas the other survey we just looked at does not. And there are a little bit little differences in a little bit more in terms of coverages that this one captures, whereas establishment does not. But those are sort of the general differences. And then I would just say, like, if you think about sort of the name of the surveys themselves, the establishment survey is employer facing. And so when you're looking at those numbers, it is indicating what employment trends look like where the employer is located, not necessarily where the employee lives. Whereas this survey is showing employed persons in terms of where they reside. And let's just get something out of the way before somebody like pushes back on this. Like, oh, well, Kenny, like, what about all these people who, they live in Dallas, but their employer's in Seattle or something to that effect? Well, here's what I would say. There's a survey. It's actually the American Community Survey. It's what we've been looking at this entire time, where it actually asks folks about that particular item. And here's what I would say. Those tech job folks work from home, they've relocated to another state, whatever, they are the minority. Okay. They are the minority in the aggregate. So most people work where they live. Do they necessarily work within the county? Uh, or do they live within the county in which they work? No, not necessarily, but they generally work in the vicinity of where they live. So, um, yeah, I mean, I feel like I've covered a lot of the Tampa market. I mean, look, you're seeing a significant slowdown in employment, and at the end of the day, that's what it all comes back to: is uh, look, if people have a job, they can pay their mortgage, they can pay their rent. Um, that looks like it's basically about to change significantly. But we're in the middle of the home buying season. This stuff doesn't happen overnight, and so if anybody has that expectation, they're just clueless. I mean, the fact of the matter is, home prices have not come down materially, and so of course the housing market in terms of what is for sale is going to remain frozen because look, when you're talking about things like DTIs, I mean 50+%, that's not going to change unless they start rolling out like 60-year arms or something, in which case I'll change my position. But that's not the case. So we've hit on a lot of things, really sort of outside of kind of the performance of mortgages and like what new construction looks like, and so we'll kind of just address those quickly. We'll start with sort of the permitting. Yes, Tampa, like a lot of Sunbelt markets, it was sort of the beneficiary of like a lot of inbound migration. A lot of people moved to Florida, what have you. That was a one-time event. Okay, not to say that it won't happen again as we get into another cycle, but more or less like that was a one-time event. And so look, when you look at the permitting, yes, a lot of permits were pulled in and around COVID for a place like Tampa, but a lot of other markets. And when you sort of normalize that across different MSAs, it's not great. I mean, you're going to see a lot of deliveries in a place like Tampa. Um, but when I look at a lot of other markets, especially outside of the state of Florida, it's actually not the worst. But I'm not saying it's good. Okay, so I just want to be clear about that. And if you want to kind of dig into that, I'm not going to show that. I think that's being a little bit too generous. Uh, but look, and we'll kind of get to one last visual and kind of flesh this out. What about investors in a place like Tampa? Well, as you can see, I mean, as a share of purchases, it really has not slowed down. I mean, you saw, if you were to just draw a trend line through that, it's only increased as a share of purchases over time. Now, are purchases low historically, like home sales low in a market like Tampa? Yes. Is it following the general trend across all these different markets? Absolutely. Um, that's why I feel like it's you know, this is the same sort of pattern we saw last cycle. It really has not changed at all. Okay. In fact, it's only gotten worse. So, that being said, when I look at things like, mortgage delinquencies and things of that nature, if I were to go look at like the national mortgage database, I take it with a grain of salt, and look, those numbers don't look catastrophic. They're trending in the wrong direction. I'm not surprised why. If you think about especially newer mortgages or newer borrowers, of course they're having problems with these prices. No wonder they are. But we know that something like the NMDB does not capture all of the activity in the market. And so I would encourage anybody to sort of go read like the technical documentation on something like that to really understand kind of it is only capturing so much of the activity. In fact, they sort of come out and say that quite clearly from the get go. And so this is why I would be really interested to talk to, uh, like a servicer, just in general, a servicer is going to have way more information on something like this, but somebody local to this market can add a whole lot of color to something like this. But to suggest something like the NMDB is going to just really capture any and all activity is just sort of, you're just being naive. Okay. So, Melody Wright, she's a great resource for all of that. I mean, she's been in the industry for a long time. So go check out her content. She's great. Uh, but I guess to kind of wrap it up, I mean, look, Tampa is no different from a lot of uh, markets, whether it's in Florida or elsewhere. Is it the worst that I've seen from a demographic standpoint? Absolutely not. Uh, from just a structural supply standpoint, no. Uh, in fact, like even from just a labor market standpoint, even within the state of Florida, it's not the worst. It is slowing considerably. You are sort of on the precipice when you're going to see the unemployment rate start to move up and not linearly. And so all of these things like delinquencies, all of that stuff is going to pick up. It's not going to improve. If you think it's going to improve, then you're just delusional. It's like you've decided that we've repealed like the economic cycle, and that's just I don't even know where to you know go with that. But if I'm looking at a market like Tampa, it's not going to the effects aren't going to be felt evenly. They sort of is logical. Pinellas, second home markets like that, and if I even look outside of the MSA, Sarasota, Lee County, Manatee, also second home markets, you're just going to see continual uh, softening in home prices. I think it's really going to take uh, us getting through the home buying season, sort of a real weakening in the labor market to where sellers are they come back to reality. And so, I mean, look, that's my 2 cents on the Tampa market. I would love to hear from some of the locals. I know a few down there who, and this seems to sort of line up with what they see, but I'm sure somebody can add a whole lot more perspective to this analysis. And so, all right, guys. Well, hopefully that was halfway interesting, and hopefully it didn't put you to sleep. Okay. All right. Everybody have a good fourth.